Hi everyone, today let's talk about the jobs data for today, then we'll go over max pain, then we'll take a look at the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sunday, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So U.S. payrolls rose by 209,000. This was significantly lower than the 240,000 expected and way lower than the ADP non-farms that we talked about yesterday, which nearly doubled expectations. Unemployment rate did step down at 3.6%. However, the jobless level did rise to 6.9%. Government hiring led the gains, followed by healthcare, social services, and construction. Wages rose 4.4%, slightly higher than expectations. Overall, not terrible. And the markets did like this initially, and then they've been selling off here right up to the close, which is interesting. You can see the significant step down from the previous read in May, 306,000 down to 209. Again, illustrating some economic slowing. Doesn't mean that we can't hold in this area. We've been here for a while, but it is lower than expectations like we talked about. May was also revised down to 306,000. You can see that hourly wage 0.1% higher than the previous read, once again illustrating that inflation is still happening out there, especially with hourly earnings. And then you can see by sector where those job gains came from. Government, 60,000. Healthcare, 41,000. Social assistance, 24,000. And then construction at 23,000. And then they highlight the difference here versus the private sector, like we talked about. 497 was yesterday's read, way higher. Overall, this once again increased the probability of getting another quarter-point hike in July. The percentage was already extremely high, and I do agree that we are going to get that 25 basis points in July, but this really locks it in. We do have CPI next week, but I don't expect that to change much. Moving over to max pain, you can see we finished right around 440, right at this call strike here. We didn't finish at the top of the puts, so there was a little bit of weakness in the markets this week. And we did expect that going into the week. We finished well below 440 like we talked about, but it's a more normal finish between these two peaks, 338 to 440. Calls not making very much money, puts not making very much money, and it makes sense we finished right in the middle here this week. Moving over to the charts, starting off with the S&Ps here on the hour and the daily. We had a nice rally into the open on the data, hit these resistances, sold off all the way back down to the 144 EMA here on the hourly chart. Big wick to the upside, momentum still bearish, RSI still bearish, and I would expect this to follow through to the downside at least a little bit going into Monday or Tuesday. We're still holding above the longer term EMAs on the shorter time frame, so you could certainly see another day of consolidation potentially. Daily chart, like we talked about, big wick to the upside. We're back below the 9 EMA. We closed around 438.53, and the 9 EMA is sitting at 438.94, so we're below that. And it certainly could follow through a little bit, at least to VWAP, which is sitting at 436.33. And like I said, momentum and RSI both look more bearish going into Monday. Moving over to the NASDAQ here on the 15 and the daily, you can see this huge move higher. Didn't quite get to my resistance at 371.25, and then we sold off really dramatically here into the close. Not great. You can see that wick here on the daily chart, just like the SPY, finishing below my 367.63 level. You can see that here, looks weak, big wick through that level. And at this point, you're trading down to around 365 as another potential support, just like we saw here. Rallied into the zone, looked clean, but rejected here into the close. And looking at the volume here on that 15-minute chart, you can see that continue to accelerate into the close, generally expecting that to continue into Monday. And similar to the SPY, on the longer time frames, momentum, bearish, RSI, also bearish. It is worth noting that we're not below the 9 EMA here on the daily chart. We're still in an uptrend, but we're finding some clear rejection from key levels on the daily chart. Moving over to the Russell and the Dow, you can see the Russell rallied and actually held most of its gains. Stuck in this zone between 183.28 and this trend line here around 187. Overall, not too bad. Still tons of volume into the close on bearish momentum. But like I said, definitely the strongest of the group. Dow, similar move up, sold off, made a new low, and this looks much weaker here. Got below 339.11 once again and held below it this time. And now it looks like we're moving to these previous lows at 335.91. Moving over to Apple and Tesla, you can see Apple throwing wicks to that trend line and then rejecting. We're now below the 921 and VWAP. Looking back down at the 55 EMA, down at 188.45. Tesla continues to hold, going sideways, still above the 21 EMA here on the 4-hour chart. Momentum on both of these are bearish. Volume picking up, RSI showing weakness, and it does look like both of these could go lower on Monday. Apple a little bit more so than Tesla. Moving over to staples and discretionary. Staples crashing, discretionary holding. Kind of interesting here. The trend is still intact, but we do now have a double top below the 55 EMA, and if this trend breaks down here tomorrow, that could be quite bearish here for staples. Discretionary got an inside candle on the daily chart with a wick to the upside. Did not quite fill the gap, but it's still being propped up by Tesla, which went sideways today. Momentum bearish, RSI bearish, volume stepping down, so not a lot of conviction in this down move. You could absolutely see this push up a little bit on Monday, and if we see a step up in volume, that could be also a little bit bullish. Ended up being a slightly bullish day on discretionary, but not by much. Moving over to yields, we saw the 2-year pulling back a little bit, hit the 21 EMA, starting to consolidate in this area just barely after wicking those highs yesterday. 10-year, on the other hand, continues to go higher, did wick these highs again here today, and then had another bullish day, momentum bullish, RSI bullish. Interesting to see the 10-year going up more than the 2-year, finally, moving back towards reversion a little bit. But we're still very inverted here by about 1 percentage point, so not great, and higher yields typically mean lower prices for equities. Moving over to the dollar here, on the hour and the 12-hour, you can see we got a huge move lower. EMA is consolidated on the hourly chart, broke them, and then moved much lower. And this still looks like a bit of a flag setup. I was kind of hoping this was a flag. We were going to hold and then break higher, but then we broke down, flagged, and now we're breaking down again, looking back down to this 101.25 area. I think this is what propped up markets a little bit, with yields continuing to go higher, but the dollar broke down a little bit, so we're kind of stuck in the zone between the two. Moving over to the volatility indices, MOVE index did not move here today, basically at all. VIX, on the other hand, gapped up, hit the 55 EMA, and then fell back down, closing just below 1490. We're back above the 9 and 21 EMAs. Last time that happened, we had a couple days of bullishness. You can see a couple times we got into that area before we had the bigger breakdown. We've had a base now, certainly could move higher. VIX, bullish momentum, bullish RSI, but like I said, did get just barely below that 1490 level. Moving over to my accounts, you can see I made a few dollars today, not much. I was not trading really very much today, but I was able to protect myself from that bigger move down in the afternoon, coming out ahead in both accounts just by a little bit. I did pick up one position here at 184 on the IWM. Did look good into the close compared to everything else. NASDAQ, on the other hand, down at 364 on the downside. I did sell a 368 call to protect myself a little bit. I do think the NASDAQ might fall into the Monday session after what we saw at the end of day today. So I'm trying to hedge that at least a little bit going into Monday. Overall, slightly bullish on the IWM and slightly bearish here on the Qs. Let me know down in the comment section what you thought of the jobs data. How much do you care about the weaker report, with unemployment continuing to step down or hover in this same zone? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.